All right. Today is December 12th, Tuesday, and we've came into the market today and saw that it has hit our weekly target already. It has smashed through the weekly fair value gap in here. I have marked, and we were anticipating this last week, Thursday, when I saw this push up and I saw NFP on the daily time frame push down, clean this daily candle, close above. See, look where this candle closed. You didn't get a down close anywhere in here. Closed above. Gave me indication that we're going to trade down to possibly the low of the weekly fair value gap, skyrocket back up. But when I came in today, my weekly target had already been met on the week, just like that. And when I see this, usually I'm done for the week. My week is over, and traders don't like that. They get mad. They think you got to show up every day. They think you got to press the button every day. And guess what, man? If you didn't capitalize on this, maybe you just got to sit back on your hands this week. And that's being a winner. But on a higher time frame, we've hit clean through our weekly FVG. Last week, I've talked about this. Let's go on a 1 hour time frame. So just I'm not gonna dive deep into Friday's and Monday's move. I'm gonna dive deeper into today's setup. But just so you get the narrative, notice how so Friday we had the non-farm, we set it up, we had the long model, and then coming into Monday, timing is very important. You've seen this happen many times. So Friday NFP creates the point of interest. When Monday opens up, Sunday opens up, and then when Monday starts trading, London session on Monday, we've tapped into this inefficiency on Friday at 9 a.m. I'm sure you can find the fair value gap on a lower time frame. I'm not going to do that. You could do that on your own. But look at the narrative here. Let's dive deeper on the 1 hour. Look what happens here at 3 a.m. Takes out all the sell side, taps in to this inefficient candle, rallies up. So when I come in the morning on Monday and I see this, I'm trading this 7 a.m., 6 a.m., 8 a.m. I'm trading inside these 1 hour candles. I'm already anticipating that price is not going to come back in here. This has been balanced. Should it come back here? Now, if I came in and it was price at 6 a.m., price was trading in this range, beautiful. I would take a long entry and I would capitalize on the move. Doesn't matter because same narrative in here. Timing is very important. So Tuesday, I'm coming in and I know there's news at 5:30. I know there's CPI at 5:30, and it's depending on where price is gonna be. So let's go on a 15-minute time frame. So yesterday on the 15-minute, we created the swing on Monday. So we capitalized on this move. Now, I know in the back of my head, depending on how price is going to close, which we close somewhere in this range, that messy, I don't like this. I know tomorrow, potentially, we can have a retracement to some point of interest in here. I was watching this candle at Retail like saying doji. Like watching this doji candle at 10 a.m. Watching 50% of this wick. Just watching this area. Because when you go dive deeper on a 5-minute, and you go on the 1-minute, let's go be exact. This close at 6:45. Taps in into this inefficient candle at 10:02. And on the 15-minute, taps into this fair value gap. So I'm watching price. Where is it going to open up? It's going to 4-hour too. Let's look how the 4-hour looks. Beautiful, beautiful. Watching this in here. The wick can do the damage. Watching that in there. Just make it. The wick can do the damage. Took out some sell side in here. Very little wick below this. Tapped into this 4-hour inefficient candle. But this is what I was watching. Go back to the 15-minute. Now, I'm coming in and price at 5 a.m. This is a 5 a.m. range. So we've ranged all day. Range, they're creeping it up, creeping it up. Retail's trying to buy this thing. Asian traders are trying to buy it. London traders are trying to buy it. What happens here at CPI? 5 a.m., 5:30 a.m. CPI opens up. This is 5 a.m. So 5:25 pushes up. 5-minute candle closes inside the weekly fair value gap. 5:30 a.m. NFP news pushes up, takes out liquidity. Look at the 5-minute close. Now let's dive deeper on a 1-minute time frame here to see the narrative. So think about this. If I was long yesterday in here, and I'm coming in and price is over here, that's a 300 handle run. That's a 250 handle run. Depending on what type of trader you are, depending on what you want from this market, I'm done for the week. When I show up, as soon as it's 6:30 a.m., as soon as if I'm not there at 5:30, if I show up at 6:30 and I saw this drawdown, so be it. But my TP level was set here. That's already winning in the market. That's already enough for the week. So I'm coming in on CPI and 5:30 a.m. whipsaw, one direction, taking out both sides of the market. Price takes out the liquidity, and obviously I'm waiting for price to create something. There's nothing. Just watch it like this. Is there anything created here? No, there's nothing. There's nothing. All that tells me is my TP has been hit. The weekly inefficiency has been taken out. There's a lot of liquidity down here. We are in a bull market, but we can get a nice intraday setup, short setup, depending on where it's at. Why didn't I come shorter yesterday? Because there's no point of interest to tapped into. Why didn't I come in shorter yesterday? I have a TP level set. I know where price is supposed to go. All those daily time frames that I showed you. So I come in and I see CPI. It's tapped into the high, the weekly FVG. Look at the body closes. Look at the wicks doing the damage. Wicks take out retail. Wicks trip people out. Look at the body closes. 532. Price cleans. This 5:30 a.m. CPI wick cleans it. Creates a fair value gap. Creates a fair value gap. Notice how I couldn't go short here. I couldn't go short here. I couldn't go short here. Price created a fair value gap, shift in market structure. FVG, 50% of the FVG. That's your entry right there. New 5-minute open, 540, continuation. %50 of this wick. I'm watching it. Snaps through. More confirmation. Remove this. So that can be a short entry. You could go short in here. You can go short in here. Attacking all this sell side. Now, where do I want the market to stop? Where, if I was short there, which I wasn't, because I wasn't awake. But if I was short there, where's majority of my TP? %50, didn't quite touch it, but 50% of the weekly inefficiency. Going to 15-minute. 15-minute FVG. So I know this market is still going to go long. Can I take the intraday short setup? Of course I can. Do I know where it's going to go? Of course I do. Do I know what majority of my profit should be taken? Of course I do. Because I understand the entire narrative of the market. Now, 5-minute time frame. Remove this 50% of the weekly fair value gap. 5-minute time frame taps in to my level. So I'm seeing it tap into my level. And now I'm going back to what we did today morning. We didn't participate in the short. We saw the short play out, and we're just waiting for a confirmation. We're waiting for the market to give us an opportunity. Now, when I go on the 1-minute time frame, and I'm watching this area, seeing price at 636, has stopped, takes out sell side, taps into the 50% of the weekly FVG, taps into the 15-minute FVG, rallies up, creates a fair value gap in here. And this is when I said today morning, this is a very nice long spot at exactly at 655. 655 paints this candle. Levon was like, I'm not getting in yet. Exactly. From his mouth came out, I'm not getting in yet. I'm waiting for the next candle to print, make a lower wick, and I'm in. Next candle opened up, printed a lower wick. He's like, I'm in. Price blasted up. I fucking love that. I love that I have somebody in here that sees that knows that. He didn't get it when I told him to get in. He got in on his own indication. Because if this thing next candle opened up and just blasted, he wouldn't have gotten the move, which is completely fine. Just completely fine. He wanted his confirmation. His confirmation was for the next candle to open up, create a bottom wick and blast. Because it shouldn't come down here anymore. Also, I'm watching this. Retails love shorting this wick. But what gives me the confirmation for continuation on the long? So price ran up. That's already a 50-point run. About a 40, 50-point run. And on a 5-minute time frame, on the 1 minute as well, but on the 5-minute time frame, or let's go back on the 1 minute, because you could see it better. On the 1 minute time frame, I was watching this inversion fair value gap. Going to 5. Well, this is how it looks on the 5-minute. On the 1 minute, watching this FVG in here that we've tapped into at 610 and traded down. So if I'm in this position here, or if I'm in this position here, or if I'm not in this position, I'm watching price, how it's respecting this 5-minute FVG, and if this 5-minute FVG is going to turn into an inversion FVG. I have a lot of confirmations on my end. Dollar was going down. Market's still very bullish. And I know that potentially we could come take this wick out, even though I'm taking majority of my profits in this FVG if I'm long here, because it's already hit its weekly target. Now, for a continuation, for me to hold the position, even hold some of it, I'm watching this inversion fair value gap. So what happens in here? Price runs up, taps in, breaks the FVG, taps back into it. Look how the algorithm is respecting these candles. Look at the closes. Price runs up again, trades back down, starts closing inside the 50% of the FVG. Price creates this swing, trades back down. Coincidentally, at 7:50 a.m. was another last tick entry, and on top, creates a FVG in here, plus taps into that inversion FVG. Last tick entry, 7:50 a.m. Stop goes below the fair value gap if you want to be safe. Or you can wait for this candle to print. 7:51 prints, 7:52 you get in, stop below this wick. If you want to play the small stop game. Let's try this too. So I'm watching 50% of the daily range. This is the daily range. Doesn't quite, does respect it. Of course it does. But I know there's this inversion FVG. So if it just trades down below it, wicks down below it, it's no problem. No problem at all. Now, knowing the fact that it has hit the weekly target, you're supposed to trade this safe. You're supposed to know that this is going to be a high resistance day potentially. Price isn't going to move fast like on Monday. You know why? Because we haven't met our target. Price is supposed to go here. It's supposed to book there. The algorithm is supposed to trade up there. Until it does so, you're gonna have low resistance moves, just like Monday. Very nice move on Monday. What do you see here? Same exact narrative. Same exact narrative. Let's go on a 15-minute. $15-minute time frame. Price creates the swing. Trades back into the fair value gap. 8:30 a.m. is when I'm getting my entry. What happens in here? Price creates the swing. When I'm coming into session, 6:45 a.m. is when I'm getting my entry. 7 a.m. is when I'm getting my entry. Now watch the narrative here. Price traded down, took out sell side, tapped into a point of interest, traded up, inversion FVG, long. Price traded up, took out sell side, tapped into the 15-minute FVG, trades up, inversion fair value gap at 831. You can watch this. If you don't get in here, this gives me confirmation at 9:01, new hourly open. I usually don't trade the lunch hour, but this would give me a confirmation. These are nice entries too. Look at the body closes on the fair value gap. Look at this 9:01 candle. Look at this 9:01 candle. And then look at the 750 candle. Same narrative. Same exact narrative. This would give me the confirmation. As soon as this candle prints bull, long, stop below the wick. If I don't get in there, I have another inversion FVG in here. So people ask me, how do you know it's an inversion FVG? What if I'm looking at everything as an inversion FVG? All right. So let's say you come in. So you come in and you don't understand any of these things I'm telling you. All you know is what an FVG is. You're trying to figure this FVG stuff out. What makes it an inversion FVG? So if price used it to go short, let's say you went short in here. Price traded down. Boom, stopped you out. Stop was above this wick. Stopped you out. What is this indicating you? Look at the retracement. Retracement down. High of the inversion at fair value gap now. Long. First candle prints bull. Longest stop below this wick. That indicates that you're short. I would never go short here. I'm just saying for a new guy. This indicates that you were wrong. So get into that long. Watch this. In between these wicks, the gap. 931 long entry, 932 long entry, long entry, long entry, long entry. Beautiful. Same narrative. Just gave more opportunity today and a high resistance run because we haven't met our weekly target yet. See where price ends today. See if we can take out the high today, or we're just going to consolidate in this range. What else did I want to mention today? If you guys have any thoughts or something you feel like you need help with, but that's pretty much what I got. Good day. Yesterday was a beautiful day. Today was a beautiful day. And being able to navigate, being able to understand these things, being able to be a winner in the market regardless of the condition is what makes you into a day trader.